Hey friends, Caleb Newquist here, editor-at-large at Gusto. Are you thinking about starting a business with partners? Then maybe you've heard of a multi-member limited liability company, or LLC. It's a popular way to organize and structure your business, and in this video, we're going to explain everything you need to know about it. As you might have guessed from the name, multi-member LLCs are perfect for teams. So whether you are married entrepreneurs, have a family venture, or a group of friends kickstarting a dream, a multi-member LLC may be the perfect business structure for you. Just like single-member LLCs, the multi-member version's biggest advantage is that it offers a safety net for each member's personal assets. That means if someone sues you, in most cases, they can only go after the business's assets. Creditors can't touch your personal assets without a court order. However, members can still face liability for co-members' missteps. Mismanagement, fraud, or bad or insufficient records can land you in deep trouble. Or hot water, whatever. Besides liability protection, other advantages of a multi-member LLCs include unlimited members. Any number of individuals and businesses can join the entrepreneurial journey. That's right, members can be corporations, other LLCs, or individuals. Members can be both US and non-US citizens. And tax advantages. A multi-member LLC has flexibility. It can choose to be taxed as a partnership, S corporation, or C corporation, whichever form works best for you and your fellow members. They're also eligible for the 20% pass-through deduction, aka qualified business income deduction. The tax stuff is important, so let's dive a little bit deeper. By default, multi-member LLCs are treated like partnerships when it comes to taxes. This means that they are pass-through entities, which means the company itself doesn't pay taxes. Instead, profit and losses pass through from the business to each member's personal income tax return. At tax time, the business is required to file Form 1065, U.S. Return of Partnership Income, which reports its annual profit and losses. The company also completes a Schedule K-1 for each owner, which reports their share of the profit and losses. Members report their share of profit and losses from the Schedule K-1 on their federal tax returns. Now wait a minute, Caleb. Didn't you just say a minute ago that a multi-member LLC can be taxed as an S corporation or a C corporation? Yes, I'm glad you were listening. Remember, I said a partnership is the default tax classification for multi-member LLCs. You can request to have it taxed as an S corporation by filing Form 2553 or taxed as a C corp by filing Form 8832. Oh, the forms. There are all kinds of reasons why you might want to choose one or the other, so you'll want to talk to an accountant about which option is right for you. Now, for the profit and loss allocation. Profit and losses are allocated to each member of the LLC, regardless of whether they receive any actual money. Even if members don't take money out of the business, they'll still report their share of the profit and pay taxes on it. How much is allocated to each member usually depends on the percentage of the company they own based on the operating agreement. Let's go through a simplified example. Roberta and Archie are co-owners of a multi-member LLC. Roberta owns 60% of the company and Archie owns 40%. The company earns $100,000 in annual profit. Here's how the profit will be allocated. Total profit, $100,000. Roberta's share of 60%, $60,000. Archie's share of 40%, $40,000. What about paying yourself or other members? Members can pay themselves by taking a distribution of their portion of the profits. However, remember how we just said that an LLC may elect to be treated as a C corporation or S corporation for tax purposes? In those instances, LLCs taxed as a C corp or S corp are required to pay their owner employees reasonable compensation. What's reasonable compensation, you ask? A rule of thumb is that an owner employee should receive 60% of their share of the company's profit through a salary and 40% through a distribution. But know this, there are no federal guidelines for reasonable compensation, so it's best to talk to an accountant when determining owner employee salaries. Every organization should do what's right for them. In a nutshell, multi-member LLCs are about protection, flexibility, and choices. Perfect for those ready to dive into the business world shoulder to shoulder with their partners. Embarking on a business adventure with partners? Consider a multi-member LLC. It might just be the best first step. I'm Caleb Newquist. Thanks for watching.